Hi guys, welcome back to Nairobi Legal. This is our first video on tax law in Kenya, and in this video we intend to achieve two key objectives. Our first objective is for us to understand the roles of tax, and we are going to conclude the video by talking about the alternatives to taxation by government, meaning that how can the government be able to raise money to run its daily expenditures other than tax. With that brief introduction to tax law in Kenya, these are some of the roles of tax. The first one being to raise revenue for government expenditure. Remember, the government needs money to buy drugs for its people, construct roads, build hospitals, build more schools, pay civil servants, and for the government to be able to have this kind of money, through your taxes, they're able to come up with a budget to meet this expenditure. Now, remember that taxes are not only about raising revenue for the government. There are certain instances where the government is going to tax people for purposes of having control over the economy or even bringing about behavioral change. Now, for government to have social control over its people, certain products can be taxed, for purposes of influencing change. And these products could be tobacco, it could be alcohol, meaning that the government is going to put slightly higher taxes on those items so that they are at least expensive and not easily affordable to everyone, and that way we're able to save people from the effects of alcohol or even tobacco that causes lung cancer. The other way of bring about control in terms of behavior could be the taxes imposed on cars. Remember, cars, when they come into the country, more pollution, they emit fumes. So that way the government will put a lot of taxes on cars so that not every single person can be able to afford a car. And that way you're also saving the environment, and those who say they can afford cars are able to pay the full price for that car, including the pollution tax attached. Now, the other role of tax is to incentivize people to invest in certain sectors. If there is a dying sector and the government wants to revive it, then through taxation the government can choose to say we're going to reduce taxes on manufacturing, and that way we're going to attract more people to invest into manufacturing, and then we'll have revival of manufacturing within the country. And this way taxation corrects market failure. Now, the other role of tax is redistribution of wealth and income. We know that people do not earn the same amount of money in Kenya. About 2.6% or even slightly higher, people in Kenya earn above 100k per month, meaning that the biggest percentage of Kenyans earn below 100,000. So how do we redistribute this wealth, whereby a director of a company is earning $1 million and a security guard is earning 20k? Through pay as you earn, we're able to actually get a portion of the director's salary, and that way that money is redistributed back into society. So this is one role of tax, redistribution of wealth and income. An example, like I've said, is through pay as you earn. So the government will take a percentage of that money. Having understood the roles of tax, now I want us to shift our focus to alternatives to tax. Other than tax, how can the government get revenue that can be used to meet its expenditure? Now, the first way the government can be able to raise revenue is by trading. We know that the government of Kenya is involved in trading. The government of Kenya is a shareholder in several companies, and when these companies make profits, they pay dividends to their shareholders. And when these dividends are paid to the government, it can choose to use this money for development projects or even paying its civil servants. The other way the government gets a pool of money other than tax is when we pay directly to the government through the services we need. Anytime you need a passport or a driving license, there's a fee that you're going to pay. If you're registering a company, there's a fee that you're going to pay to the government. And this way, the government is able to collect money that can be used to finance its expenditure. We also have resources such as gold and oil, and once these things are sold, the government is also able to get money that can be used to construct roads, schools, among other projects that can be done by the government. Also, there are instances where the government will get a loan to finance mega projects, we have the SGR. So here the government, other than using your taxes to run such a mega project, it will go out of its way to get a loan to finance such a project. We also have grants given to the government to either build hospitals and buy drugs, and that way, instead of using your taxes, the government is using grants to meet these expenditures. So these are some of the alternatives to tax. But just to point out one thing, when it comes to accountability, as far as taxes are concerned, it is very easy for citizens to demand for service delivery based on the taxes that they have paid. So accountability is very easy. You can demand for service because you pay taxes. But it's very hard to hold the government liable for resources. I mean, if the government has sold oil, how do you hold it liable for the money they have made from that? It's actually a bit complicated as far as resources are concerned. Also, when it comes to debts, remember, a debt must remain within sustainable levels. If it goes beyond, then most likely the citizens are going to suffer. Remember what has happened in countries such as Mozambique that have overborrowed money. We have countries such as Zambia. When the loan goes beyond the sustainability levels, issues are going to arise that are not going to be fair to the citizens, because again, at the end of the day, the citizens have to pay back the loan that has been gotten by the government. In our next video, I want us to discuss how you can structure a transaction better to pay less tax. And so if you haven't subscribed, remember to subscribe so that you receive a notification when we talk about how to structure a transaction better to pay less tax.